Recession fears driving a global market sell-off after Friday's disappointing July jobs report. Investors are concerned the Fed has pressed the brakes on the economy by too much for too long. The Dow plunged more than 8,000 points. The Nasdaq lost 576. The S&P 500 gave back 160. And here to talk more about the market drop is Fox business analyst Phil Flynn. Thank you so much for being here.
Great to be here, Tia. It's been an exciting day, to say the least.
It's been really interesting. On some stock I was looking at, it's been kind of like a roller coaster. Why is the stock market freaking out today?
You know, I think it's because it's a Monday and they panicked. And really, the panic didn't even start here in the United States. Well, maybe it did because we had a soft jobs number last week, but it was really in Japan and China. In Japan, they've been raising interest rates where the rest of the world's going in the other direction, and that's causing an unwinding of a lot of trades. And when that started to happen, there's a lot of hedge funds that have been doing this trade that got a lot of margin calls, so that exacerbated the selling. Here in the United States, we saw the Nasdaq open up lower than it ever has before for a one-day sell-off. We have the stock market come back down. So there's concerns about tech, the artificial intelligence trade slowing down just a little bit. But, you know, I have to give credit to a Chicagoan. You know, the Chicago Fed president, Austin Goolsbee, seemed to calm the markets a little bit when he spoke early this morning. He said, listen, you know, the jobs number, it wasn't great, but it's not that bad. The Fed can fix whatever's wrong. If they're behind the curve, they can get more aggressive. And that seemed to calm the market. So we had quite an incredible comeback. We didn't come back all the way, but we got about halfway back.
Do you expect the Fed to respond to this on a more larger than just, you know, coming out with comments? Do you expect more from the Fed after today?
At this point, no, because I don't think they want to create more panic, right? There's no doubt the Fed is behind the curve, but there's concern that if they try to correct their error too quickly, it will be a sign of panic and it will cause even more selling in the market. So I think right now, the rumors of an emergency rate cut are probably not true. There was some talk of that today. But, you know, unless the market really takes a turn for the worse, I'm assuming that the Fed's going to stand pat, send signals to the market that they've got it under control, and then come September, get ready for a big cut.
Let me ask you this. There may be someone watching right now. They may not be an expert when it comes to investments and trading and things like that. What stock should people possibly invest in right now, since we saw some of those stock prices really drop low?
You know, all the ones that you wanted to buy, but you couldn't afford, right? You know, you're talking about some of the biggest sell-offs we've seen. One thing, Apple saw a huge sell-off after Warren Buffett reduced his holdings of that stock. So what some people are saying that the tech sectors, the ones that have been driving the market, are probably overdone. So maybe get back into some traditional stocks like energy stocks, ExxonMobil, those good old-fashioned dividend players. That may be the place to be. But I think if you have a longer-term exposure, you have more risk tolerance, this is probably a great time to buy those artificial intelligence stocks that got away from you.
I know you've been doing this for a very long time. Any predictions that you think we could see in the next few days, maybe even by the end of the week?
You know, I don't think we're out of the woods yet, but the way the market bounced off the low, it does signal that things could be a little bit better. I would say for the next 28 to 48 hours, things are going to be very, very nervous trading. But ultimately, the cooler heads are going to prevail. I think this is a much needed correction in the stock market. It's going to present good opportunities on buyback. So I would be careful. Now, depending on your retirement horizon, if you're retiring next week, this isn't a good thing. Right. But if you're a young person, this is a great opportunity. Just keep buying on the brakes and you'll do fine.
All right. Great advice there as always. Phil Flynn, thank you so much for joining us on Fox 32 today.
You got it. It's great to be here.
All right. Sylvia and Terrence, I'll send it back to you.